Welcome back to our tutorial series on Note Unlimited. Today, we're exploring wraparound mortgages, a unique and powerful tool in real estate financing. But first, what exactly is a wrap note? A wrap note is a type of financing where a seller extends a new mortgage to a buyer that wraps around an existing mortgage on the property. This means the new mortgage combines the remaining balance of the existing mortgage and an additional amount for the purchase price of the property. In simpler terms, instead of the buyer getting a mortgage from a bank to pay the seller effectively becomes the bank. The buyer pays the seller based on the terms of this new wraparound mortgage, and the seller continues to pay the original mortgage. But now with the buyer's payments, this arrangement can be beneficial, as it often offers more flexible financing options for buyers and potential income benefits for sellers. Now that we understand what a wraparound note is, let's dive into a practical example to see how these can be beneficial for real estate investors. Imagine Bob owns a property with an existing mortgage. The remaining balance on this mortgage is $100,000 and it has an interest rate of 4%. Now, Bob wants to sell his property. Alice wants to buy it, but she can't secure a traditional mortgage. So, Bob decides to offer her a wraparound mortgage. In our example, the sale price of the property is $150,000. The terms of the wraparound mortgage will include the existing $100,000 at 4% and an additional $50,000, making a total of $150,000. Bob decides to charge a 6% interest rate on this new mortgage. Alice will make payments based on a $150,000 mortgage at 6%, but Bob will continue to pay the original 4% interest on the initial $100,000. The difference in interest rates and the additional principal amount of $50,000 create an opportunity for increased cash flow and profit. Now that we understand the wraparound mortgage, let's see it in action. We'll explore how Note Unlimited can streamline managing these complex transactions. To manage your wraparound mortgage in Note Unlimited, start by creating two notes for the identical property address. For the first note, which represents the wraparound mortgage, make sure to set the wraparound note parameter to yes. This distinguishes it from the second note and links the two within the system. Now, on the Note Details page, by selecting the Related Notes tab, you can view both notes you've entered. The first note details the original mortgage, while the second captures the terms agreed upon with the buyer. Together, these notes synchronize within Note Unlimited, providing a clear view of the wraparound mortgage's structure and progress. The amortization table here details the payment breakdown of principal and interest for each note. The corresponding chart visualizes the remaining unpaid balances over time. Note Unlimited simplifies tracking the gradual reduction of the loan amount as payments are made. By switching to the advanced interface, investors can access the equity table and chart, which provide insights into the property's market value over time and the potential growth in equity, an essential factor in long-term investment strategy. Under the Cash Flow tab, you can monitor the expected monthly cash inflows and outflows. The charts here offer a visual representation of your cash flow, helping to forecast your financial status at each stage of the mortgage. Our journey through the cash flow charts begins in May 2024, where we see a starting point of positive $99,500 in cumulative cash. This reflects the amount financed through the wraparound mortgage. However, in June 2024, this figure dramatically decreases to approximately negative $50,000 due to the disbursement of the wraparound loan amount from the seller. As the buyer makes consistent monthly payments, the cumulative cash slowly recovers. This is visualized by the gradual upward trend on our chart, indicating the buyer's payments being applied to the loan balance. By May 2034, after a decade of steady payments, the cumulative cash breaches the zero mark, indicating that the investment has already been paid off. Throughout this period, the total monthly cash remains steady at $421.91 due to the monthly payment received from the buyer, reflecting the reliable cash flow generated by the wraparound mortgage. With Note Unlimited, these insights are at your fingertips, allowing for strategic planning and a clear view of when your investments will start yielding returns. For a more comprehensive view, the Investment Position tab calculates your cumulative cash and net position over time. This allows investors to gauge the overall profitability and returns of the wraparound mortgage arrangement. Lastly, this advanced chart compares the cumulative cash flow with the net present value, or NPV. The net present value, or NPV, is a crucial metric in investment analysis. It helps you assess the profitability of your wraparound mortgage by comparing the value of money received in the future to the money spent today, reflecting the time value of money. Once calculated, the NPV figure is displayed alongside your cumulative cash, providing a direct comparison. A positive NPV indicates that the projected earnings, discounted for the time value of money, exceed the initial amount paid. This helps determine the investment's viability under current market conditions and with your financial goals in mind. With Note Unlimited, you have a comprehensive toolkit at your fingertips to manage and analyze wraparound mortgages effectively. You're equipped to make informed decisions, whether for immediate cash flow or long-term investment growth.